It's 11 a.m. in Lagos, Nigeria, the economic capital of Nigeria, and this is Business Edge. I'm Tolulope, Adeleru-Balogun. First, the headlines. Africa's internet economy could be worth $180 billion by 2025. Nigeria's Fintech Kuda secures $10 million in seed funding. And later, we'll wrap things up with NC4 to watch. Those are a few financial stories we're keeping our eyes on. Again, welcome. This is Business Edge. $180 billion, that's the figure we're going to be discussing now. A new report called the E-Economy Africa 2020, released in South Africa by Google and the International Finance Corporation, estimates that Africa's internet economy has the potential to reach 5.2% of the continent's gross domestic product GDP by 2025. This means it would contribute nearly $180 billion or 2.8 trillion rand to the economy. The projected potential contribution could reach $712 billion by 2050. Driving this growth is a combination of increased access to faster and better quality internet connectivity, a rapidly expanding urban population, a growing tech talent pool, a vibrant startup ecosystem, and Africa's commitment to creating the world's largest single market under the African Continental Free Trade Area. Now, News Central's business correspondent Nasir Agbalaya joins me to delve into this. 180 billion. For many people, we have to conceptualize what the internet economy is. So what exactly is the internet economy?
Well, basically, this is everything that has to do with the internet, from small-scale enterprises who sell their wares and services online to the growing e-commerce empires which you have across Africa. And also, of late, you have many startups from Africa that are breaking grounds. Well, all these have brought more people online. And now, since more than, we have like 10 or 20 years ago, where there are more people on their mobile devices, largely due to the large army of youth across Africa, many innovative ideas of how to do business, how to interact, is also keeping more people online.
Okay, and those numbers are absolutely booming across the continent. Presently, 60% of the African continent accesses the internet via mobile. By 2025, that'll be 167 million more people from sub-Saharan Africa will have subscribed to mobile services, which would bring us to 623 million users. And of course, smartphone connections in the region will also double. In the next decade, the number of internet users in Africa will grow by 11%, representing 16% of the total global amount. So what are we looking at in terms of businesses who are traditionally used to the brick and mortar standard of business, trying to adapt to how things are online, particularly given that a lot of the consumer and the clientele available to them are young Africans who are upwardly mobile, who are trying to move from one region to the other, who are more connected and a bit more savvy in terms of asking questions about where their money is going?
Well, people are, like you said, people are now innovating and truly becoming more adaptive to the reality. Well, the COVID-19 pandemic has changed how everybody live our lives, and now businesses also have adapted that. Of recent, you remember we talked about a market in Kenya that has moved from the open stores to now having their own form of e-commerce.
The 40-year-old Uhuru market.
Exactly.
44-year-old.
Wonderful. Now, this is a trend that is happening across Africa, not just one region. And now, there are many economies also are liberalizing their internet access, allowing more people to come in and vie for broadband access and also do business there. So this is the new trend, and more governments are embracing it also. Of course, with that, they will have more revenue.
But are we also sure more governments are embracing it? It's because we had a conversation on the debrief about internet regulation and social media shutdowns. And we've seen that here on the continent, the number of countries that are actively, at one point in time, actually shutting down the internet or in one form or the other, restricting social media has increased in the past 1 year. In Uganda, they lost millions of dollars worth of revenue because they introduced a social media tax. So are we actually sure African governments truly understand the potential that lies in the digital economy when we're seeing behaviors by about 22 countries that sort of lie counter to that?
Yes, they do know that there's money to be made online, but unfortunately, the fear of the youth is driving this, how should I put it, this pseudo, not really pseudo, it's really actually real clamp down, but not a blanket one. They're targeting a way of reducing how people access the internet, but not every time. This happens only when there is a perceived, say,
Threat
revolt
to the economy or perceived threat to the establishment.
Agreed. Well, more of a sort of revolution which usually starts online. A topic, and people gravitate and move from online to the real world. So to try and forestall this is what leads to the clampdown. And also when there's any election that the ruling party mostly feels that the opposition is having an upper hand online. So the fear of it transiting to reality, they try to limit access and clamp down. And at times also, it could be about security. This has happened across time. Of course, with this clampdown, it has been a bit effective in reducing this perceived threat. We've seen that with NSAS, where literally there was a clampdown, although theirs was not digital, it was more of real life, and even reducing the funding of the movement. But elsewhere is outrightly blocking access to the internet. Now, vis-a-vis this perceived opposition, have always been muffled with this, but when it comes to the business aspect of it, it's a different ballgame entirely.
Yeah, it cost the nation,
True.
It cost the nation in terms of the economy and the output. So even on top of that, we know that the internet can deliver very clear benefits to an economy at low cost, also at the potential for scale. The internet has empowered historically marginalized people, including those in regional environments and in conflict zones. So let's look at what governments need to do. We also have governments traditionally on the continent that are not proactive, they are retroactive, they act after something has come. But we have to see a situation where they're standing at the front, or at least they're on par. We're seeing so many fintech companies come up. Now there's InsurTech, that's insurance technology. And you'll see a boom in these businesses, and then it'll become like government wants to just tax them to death or find ways to regulate them because government doesn't understand the space. What do we expect African governments to do proactively in this space, especially given the fact that poverty is a major issue for the continent? Unemployment is a major issue across the continent. It's the youngest continent in the world. This has the ability to bring more people out of poverty and provide employment for young Africans.
We'll start with that end part. Now, the youngest continent on the world because Africa has a youthful population. Now, because of this, it's a winning formula if the government can actually key into what the youth need. In this sense now, education is the first thing. Some countries are doing it right. South Africa to an extent, mostly Rwanda and Kenya, where they have greatly empowered the youth. Now, across the board, many African leaders need to have programs, scholarships that will groom youth, that will start teaching coding from the primary school, make it easily inaccessible. Many schools need to become digitalized. Access to the internet, access to laptops need to be available. Worst case scenario, maybe you have a workstation where you have one CPU connected to like 4 or 5 monitors and multiple keyboards. Now, with this, you have access to the internet from a very young age. When this happens, the young minds are molded in that direction. Then we could start thinking of the next 10, 20 years where we are truly exporting talents to other parts of the world. You can see what's happening in Asia. Asia now truly exports refined talent, skills that are used everywhere in the world. Look at the Fortune 500 tech firms. They are mostly from India. Why? Because India, from the Super 30 formula, where they groom people with STEM, that's science, technical, engineering, and mathematics. This formula is now paying off, where they have their workforce working everywhere and anywhere in the world. This is something which African leaders need to start now. Education first, then the environment. After you've groomed them, you need to have easy finance. Power needs to be constant because you cannot work on tech without having constant power supply. With this, many solutions will be organically from every nation. Most of the problems we are battling with now could be solved in our generation.
Okay, we'll see how this plays out, because I think it is interesting to point that there are some structural, infrastructural, and educational obstacles that could slow this down. But what we're looking at is $180 billion. That could be the worth of Africa's internet economy, the digital economy, by 2050. A bit more on that. Of the total GDP for sub-Saharan Africa in 2018, 8.6% came from mobile technologies and services, and that translates to $144.1 billion of a gain. Increased connectivity also presents an opportunity for businesses and communities to leverage on technology. And let's not forget, the internet means that it's not just Africans who could be your customer base. You have the whole world, literally, at your fingertips. We're going to take a quick time out. So when we come back, conversations continue, because there are those who have taken advantage of the digital economy, and one of them is Nigeria's Fintech Kuda, which has secured $10 million in seed funding. The details after this. Now, the revolution in Africa is happening, and it is digitally driven. I beg your pardon. There we go. Now, despite the negative impact of the COVID-19 pandemic on businesses and income, Africa is currently one of the fastest growing regions when it comes to mobile growth. An example is Kuda, a fintech startup in Nigeria that operates as a popular mobile bank for consumers and small businesses. It has announced that it has raised $10 million. This is the biggest seed round ever to be raised on the continent. The funding comes on the back of strong demand for its services and its ambitions. One of those ambitions, according to CEO Babs Ogundeyi, is to become the go-to bank, not just for those living on the continent, but for the African diaspora. According to him, we want to bank every African on the planet, wherever you are in the world. Since launching in September 2019 in Nigeria, it has picked up around 300,000 consumers. From consumers to small businesses, Kuda, on average, processes over $500 million worth of transactions each year. Or rather, that's each month, because now I don't know what the year would bring. The $10 million is being led by Target Global, the giant's venture capital out of Europe, with Entry Capital and SBI Investment also participating, along with a number of other notable individual fintech founders and angels. Business correspondent Nasir Agbalaya is still with me, and this is fantastic news coming on the heels of what we heard with Paystack just about 2-3 weeks ago. And for many young Nigerians in this fintech space, the financial technology space, it then again shows that there is talent and there is opportunity out there waiting for them. So let's talk about this fintech space. What exactly is it meant to do compared to the traditional financial services market?
Well, basically, this was encouraged by the Central Bank of Nigeria and many other countries to try and ensure that those who have not been banked,
the unbanked, as we like to call them.
Exactly. They have access to finances. And interestingly, all the protocols which the usual financial institutions have, these institutions do not go with them. Basically, they just need to just have your mobile line, smartphone, and you can do business with them.
Okay, so you can do business with them. This has really cut out a lot of the red tape, and it sort of it piggybacks on the conversation we had before the break about the digital economy. It's brought these services directly to the people without the people necessarily in some towns having to go 4, 5, 6 kilometers to go to a physical bank.
True.
They can do all of that there, which leaves them with a bit more money in their pocket, leaves them with access to certain things. So $500 million worth of transactions every month. Who is banking with Kuda? Who? Since September 2019, they're just a year old plus.
Yes. That's the beauty of it, because of the easy access, and they have no limitations whatsoever. As little as 2,000 or 1,000 naira to as much as millions. Now, the thing is, like I said, having your mobile number that you have registered in your smartphone, with that, just apply. Confirmation is done. You download their app, and as easy as just installing the app on your phone, following all their T's and C's there, and you have it. Now, most of the fintechs are always encourage you to give them access to your contact base. Yes, this has raised eyebrow, but also for them, it's a way of knowing that this is not a scammer, someone who wants to defraud them. So when they have access to your customer base, these individuals would over time would be, say, part of their own organic way of marketing to new customers. So when they have it, they also market themselves to these individuals in your contact base. And when they have, oh, I got this message from this so and so, like say there's a Kuda now.
Yeah.
Oh yes, I borrowed money from them and I got it that day. You did? That word of mouth has been working a lot for them. So in a way, they're doing that, this organic marketing. And with this, in Africa, we like what can be verified easily by someone you know. So with that, they have been able to spread very, very fast. Because a little amount can be borrowed and, of course, be paid back fast, many people have been going to them over time. Not just them, I must say. There are many others out there that are doing the same thing.
Yeah.
You just have some little nuances that are just different from each other. But by and large, the internet has really come to stay and helping many people to stay in business.
So let's talk about the seed funding. Now, seed funding is basically also as seed money, known as seed money or seed capital, is a form of securities which is offered by an investor basically, and they invest capital in a company, in a project, in a startup, as it is with Kuda, and then in exchange they get an equity stake or convertible note stake in the company. Now, seed funding is also the first round, the first equity funding that most startups go through. We've seen this happen across the continent in different forms. There's one coming up on NC4 to watch. That's from the Kenyan side of the continent as well. But we're seeing a lot more attention coming to the fintech space and coming from seed funding, some venture capitalists, some angels, as it may be. How is angel investors? We even have the other rounds of it, of course, the Series A round. All of this for many people is just, it's terminology. It's what does it mean? People are investing, basically.
Yes, that is the main part of it. Now, the lovely part which people tend to find a bit confusing, the angel investors. These people, they just put their money down and it's always under thousands of dollars. They just put the money there. They are not involved in the day-to-day running of the business.
But they are expecting a return on their investment.
Definitely. That is part of the deal.
So it's not an angel like they drop the money. Because a lot of us are looking for that.
There's no free money anywhere. No. Now, these investors put their money down. They don't ask you how you run the company, but they will ask you for the return at a period of time. It could be 6 months, it could be 1 year, depending on the agreement between the investor and the owners of the business have agreed to. And over time, they have found out that many Nigerian, not just Nigeria, really, many African startups have been able to deliver on the money. That's the beauty of this. That is why many more people are coming into Africa, investing across the board, because these young individuals in our continent are making money for the whole planet.
And it's interesting, different values exist, but banking in Nigeria continues to remain a very attractive sector with over $9 billion worth in value, but there are high levels of competition. The vast majority of consumers are underserved with what they are offered by the traditional financial players in the system. There's a lack of access to services, especially in the rural areas, issues of affordability and poor user experience, all contributing to frustration. And if these fintechs can cut through all those layers, they will, of course, be having consumers at their lines. So we will be following all of this coming up. Thank you so much, Nasir. It's really interesting to just watch how technology is liberalizing things and allowing young Africans, young Nigerians, young Kenyans, young South Africans and Rwandans to create services that answer questions and that solve issues.
True, because really the world now is online and Africa has come to stake our claim on the digital market. And yes, we are making money here also. And
you're going to hear about another claim right here on NC4 to watch. But we start first in Nigeria, where the country has ratified membership of the African Free Continental Trade Area Agreement. And that has come less than a month before the deadline. The AFTA agreement comes into effect on the 1st of January 2021. Nigeria, which is Africa's largest economy and most populous nation, becomes the latest country to ratify membership of the Free Trade Agreement, as the agreement has so far been ratified by at least 30 African Union member states. Across the continent, on the eastern parts, Kenyan micro-insurtech startup Turaco has raised $2 million in seed funding. The micro-insurtech, and that's basically insurance technology startup, raised $2 million in seed funding as it seeks to expand further into sub-Saharan Africa. Now, investors who took part in the funding include Novostar Ventures, Mercy Core Ventures, Musha Ventures, Gan Ventures, and Zephyr Acorn. Moving on now to the African Development Bank that has announced the postponement of the 2020 Africa Investment Forum to 2021 due to the ongoing COVID-19 pandemic. The 3-day event was scheduled to take place this month in South Africa's largest city of Johannesburg. And of course, we know it follows other announcements from big financial players. And finally, Canadian miner Lucara Diamond Corp has announced that it has unearthed one of the biggest diamonds ever found in Botswana. The mining company found a 998-carat high white diamond at its Caraway mine in Botswana. This is one of the 5 largest stones ever discovered. And that's it on Business Edge. Thank you so much for joining us. As always, you can head to our website, www.newscentral.africa, and follow us on all of our social media platforms at News Central TV for the latest business content from here on the continent. From the north to the south to the east to the west, we have you covered. And until next time, I'm Tolulope, Adeleru-Balogun.